Okay there, guys. I think we'll just start right now. Okay, so very good afternoon, good evening to some, and I would like to say a big thank you for you guys attending this live webinar, the Geometric Trading Market Outlook. Today is the 20th of February already. It's really fast. Okay, the months and the days and the weeks are passing by really fast and quick. So we shall then skim through very quickly as well. But before going through the charts, I'll just read out aloud the risk warning, okay, before we start the market outlook. Now, Forex and CFDs are leverage products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. So that's it. That's the risk disclaimer, the risk warning right there. So we can then now go on to the charts. I know it's been and quite a number of traders mind, of what's going on really, and then we've seen some spikes with the GBP, especially GBP, JPY, a couple of surprises here and there. We're probably not very sure with the trend, and I just want to explain a couple of things. We'll go back to basics of clock angle to determine the trend. That's one of the most important thing, and then the use of the exponential moving averages or EMAs as well. Okay, and but we'll go straight on to certain pairs, and we will then discuss. I hope you guys can hear me loud and clear. Yeah, I've got no reply from anyone, but just to make sure that you guys can hear me okay, could someone just let me know, type into the box, tell me that you can hear me loud and clear and see my screen, just to check. Brilliant, Marina. Thank you so much for that. Okay, good. So we've talked a little bit about the Dow Jones as well. Okay, this is just for example sake. I know many of you may not be trading the Dow Jones or DJIA or US 30. Now this one here is a US 30 Dow Jones chart on the 1 hour. Okay, and the 1 hour here, what I would like to do is to first always bring you guys to basic on the clock angle. Okay, the clock angle here, like it still stays the same as of last week. If you guys remember, we talked about this, and it's on a 1 o'clock trend here. So hence the reason we had loads and loads of move still going to the upside on the Dow Jones. So stocks are doing great in the States. Okay, but I just want to warn you guys that when stocks are doing really, really good, it does not actually mean that the economy is really good as well. It has a lot of politics within that, because in previous crashes, market crashes or economic crisis, 2008, 1994, a lot of things have had happened that way as well. Just before the crash and before all the bad things start happening economically, you get loads of rise in stocks and all that. So don't get fooled by stocks moving really great. That means economy is really good. Does not always work that way. It does not always match as well. Okay, so but here we are here today to look into the Dow Jones for practice purposes in understanding how strong this trend is here. Now, one of the ways is, of course, you've got the 50, the 100, and the 200 moving averages. They are the same moving averages that are used in Bloomberg, CNN, CNBC. Every time they've got the chart shown, if they've got lines, they're usually using these lines, the 50, 100, and 200. And the 200 is thought to be quite popular. It's used quite a lot. What it means is that you are finding the calculation of an average of 200 days. If it's 200, if it's 100, it's 100 days, 50, 50 days. Okay, so the more data, the heavier the number, the more reliable it is compared to less data. So if someone's using, let's say, the EMA or the moving average 5 or 3 or 6 or anything like that, then that may actually be due to the strategy of crossing the moving average and things like that, and it's not actually used to determine the trend. Now here we are using the moving averages to determine the trend first of all. Now one very important thing is the clock angle. Clock angle here is a 1 o'clock clock angle, giving you a good hint that is actually quite strong, like the angle of your watch. Yeah, we've covered this before, and for those who are new to the clock angle, it's exactly like looking into your clock or your watch. So you want to see this whole very significant move right up here. Now you can just see the most obvious move right there. That is a 1 o'clock type move. Okay, a 2 o'clock kind of move is here maybe, and then 3 o'clock move maybe it's lower. So anything that is lower 3 o'clock move, that means it's uncertain. Anything that is coming towards a weakening towards the 3 o'clock angle, that means that the uptrend is weakening. But anything that is moving upwards towards 12 o'clock, going this way, okay, the angle is getting steeper and steeper going this way, that means that it's hinting you, giving you hints of a stronger and stronger uptrend. Okay, like what's going on with the clock angle on the 1 hour chart of the Dow Jones. Okay, so Dow Jones, because it's, you know, it's contractual as well, it's under CFDs too. It's not something you can look into the 4 hour chart so much and all that, so it's always on the shorter time frame. So let's go on to currencies at this moment of time so you get an idea. Okay, now if we go into the USD JPY, quite a number of us are still asking of whether it's a downtrend, whether it is bearish or bullish for the USD JPY. Now at this moment of time, we are expecting more and more positivity, okay, coming from whatever Trump is doing, because Trump, at the end of the day, no matter how ridiculous ideas he may come up with, or whatever things that are on the news about what he does, at the end of the day, he is still bringing in investors. So investors are still coming in. So he is like part of the rich man's club. Okay, so the rich man's club will always have things or benefits reserved for the rich man's society, the investors club. So the investors are coming in, so money flows coming in as well for the USD. Okay, so that is what is, you know, is giving us a bit of a conflict. The real scenario economically, it's not as bright as what you could see in the charts going up, up and up, you know, with the USD JPY especially. But just to remind you as well, we are still looking at this bullish cup and handle pattern. Okay, so the bullish cup and handle pattern is giving us a bit of a hint in the long term, from now a couple of months time, even until the middle of the year, mid-year, or even more than that, we still would expect a potential upward move due to this cup and handle pattern here. Now this cup and handle pattern has come down this way, and that is the 50% Fibonacci level from this end to that end. That is one of the criteria. Now it's moving, it's on the way up, as you can see. It's on the way up, but still it's zigzagging, of course, because you've got corrections and everything else, but this is a monthly chart. But we're expecting it to come out of the, to break out of the, how do you call that, mouth of the cup area here. Okay, this is the mouth of the cup area here, and then come back down a little bit, and only then make that move upward. So this is monthly chart. This is what we expect for a monthly chart. Okay, this is for the USD JPY. Now, for those of you guys who are wondering, then what would happen to gold? Now, gold may or may not, what you call that, retain its correlation with the dollar. Okay, some things are correlated for some time, but sometimes they can change their correlation. For now, US dollar and gold, they are opposite. They're correlated negatively. So USD goes up, and then you got gold coming down, correct? But then we cannot rely on that entirely, because things can change. Whatever that goes in the same direction can one day just go opposite direction, and vice versa. So this is what had happened with oil in the past. Oil had one point gone, you know, at the same direction, and then they go wide apart, and then they go same direction again, dollar, and things like that. So these things can actually be changing all the time. So don't rely on correlation far too much. It's probably best for us to look at what's going on in the world, okay, affecting the price, but most importantly, the chart itself. So here we've got this on a long run. So what we will then need to do is not to open up all the buying trades now, because the monthly is telling you that. Of course, because it's a couple of months down the road, it's very, very well in advance, anything can still change that, and this whole pattern can just change or fail as well. Okay, so what we want to do is keep that on alert mode. Okay, prices is still following that pattern nicely. What if it goes up even more, and then got more news makes it break out there? Then you know that that pattern is becoming more and more successful. Okay, then you can always go back into a lower time frame. Now, the thing about lower time frame as well is that treat the lower time frame like bricks. for building a house. You need brick by brick to build that big picture, that big house for you. Okay, so whatever you see in the lower time frame here, let's just insert the moving averages first. I'll start from the basics. 200 moving average right there. Okay, because I see that some of you guys are new to the group and new to the webinar as well, so I'll just repeat that. We've got 100 right there. Okay, so I'm using the 50, the 100, and 200. So I've got my 100 right there, and now the 50 right there. Okay. Okay, I think I've got some questions here. Give me a second. All right. Okay, so as you can see now, this one here on the 5 minutes chart, straight away we want to, get a summary of what the market sentiments are. Now, prices, as you can see, candles in between all lines. It's not a good sign when prices are not above, well above, or well under the 3 lines. If they are in between here, it's giving you some uncertainty, somewhere it's telling you that it's unsure. The market itself is waiting for something or holding on to something before they push up or pull down the prices. Okay, so here we've got a bit of uncertainty on the 5 minute chart. Could we see that it gets clearer on the 15-minute chart? It's the same in the 15-minute chart for the USD versus the yen. So here again, loads of uncertainty. Prices is going this way at this moment of time. It's going sideways, and we call it the 3 o'clock. Okay, the 3 o'clock direction, or the 3 o'clock angle. That 3 o'clock angle usually signals uncertainty. It's not sure whether to push it up or pull it down. So it's got a kind of breakout needed here. It's a bit of a triangle type pattern here as well. So we don't actually know where the direction. We need the market to give us that indication of where it prefers to be, on the upside or the downside of the market. So here we have got that on the 15-minute chart. So let's see whether or not things are clearer on the longer time frame. Okay, so we'll erase all that drawings there, and we go on 30 minutes. As you can see, it's still the same story. It's still got something that the market's waiting for, the dollar versus the yen. It's still not breaking out. Still some things going on. So what you'll be doing if you are trading on the 30 minutes chart, 15 minutes and 5 minutes, you're literally trading in within that zone and in within the range of a 3 o'clock angle. The 3 o'clock angle, because the market is very uncertain, it is exactly like you putting your finger in a spinning washing machine. Okay, what that means is, because the market is in doubt, you should be staying out. But if you're not staying out, that means you are going into the complication of wondering what the market will give you, whether it's more bullishness or bearishness. It's totally impossible at this moment of time for the psychology of the market to be clear, because you will be also confused in this market. Okay, and your trade will then reflect that confusion as well. Okay, so here you go. Now when we go onto the 1 hour chart, we have got the candle still moving sort of a sideways trend, but favoring the downside in some very, very small extent. The reason I say that is because you've got candles now going under the 3 lines, but still it's not as clear as it should be. Why? Because even though it's under the 3 lines, the 3 lines itself, they are moving sideways and they are entangled and touching one another like this. It's not a good sign. So you see, we've got 5 minutes right down to 1 hour chart, right up to 1 hour chart. It's not clear. It's not a good timing for trading the dollar versus yen. Okay, I'm not sure for those who are scalping, maybe they've got strategies that would fit this kind of market environment, but I'm favoring more trading the trend, so that I can look into patterns that would mirror that trend. Okay, so trend is really highly crucial for me. So here itself, you have got that a little bit of hope to look into the downside for the USD yen, starting from the 4 hour onwards. Then when you go into the daily chart, you've got more uncertainty again. Okay, then as you go on and on and on, we could see then some sort of hope for an upward type move. But again, this is based on the weekly and the monthly. But everything else from 5 minutes or so, it's really, really not sure. So I want to give you that example for USD JPY now. It's not sure, it's moving slow, it's not giving you an idea, also because in the States, it's a public holiday. It's President Washington's Day. Okay, so you've got the least market participation in the US. So I want you to understand that sometimes when you look into time frames as well, and you're trying to make a story of the trend, you need to also understand what's going on in that country. Okay, so sometimes whatever you see on the chart may actually reflect on whether or not you should be participating in the market. At this stage, the market is not participating in anything got to do with trading so much, actually. So hence the reason it may be marinating the news until it waits for a big burst out of some sort tomorrow to the downside or upwards when market opens. Okay, so there you go, USD JPY. Now we'll just go into the GBP JPY as well before we go on to the Euro USD, because we are not expecting much high impact news as of today. Okay, but starting tomorrow we may have got news revolving the GBP. No, we have economic data releases that are of high impact, medium to high impact, revolving Australian dollar, GBP, okay, and on Wednesday then CAD USD and things like that. So let's just look into the GBP JPY, and I want to talk a little bit about how you look into having a support resistance zone or level. You should never have just a resistance or a support line, a single line. It's not a good thing. It's better for you to look into a zone, okay, and how we do that. Now, before that, a bit of a trade idea. GBP JPY, we have got prices challenging that area here. I like it when I look into a pattern that sort of comes downwards, goes up to the C point. So that's my A, that's my B. I like it when the C point finds support or resistance, in this case resistance, in one of the following moving averages, the 50, whether it's the 50, the 100 or 200. The more the lines, the better to give you that indication that it's finding a wall. Now it went up there and found a wall in that area, and it got caught in within the 3 lines. It's a good thing. If C finds that resistance there, it's a higher chance for it to actually find resistance and head downwards. Okay, but again, we're not putting any trades at this moment of time. We're simply planning. There is a potential or a probable pattern here, which is an A, B, C, and D. Okay, but we are not trading until prices have gone to a certain level, and that level is this level here based on the centroid. You need to convert that ABCD pattern into a geometric pattern. Once you link A right down to the D area right here, you have got that center area. That center area marks at 140.43. So that 140.43, usually if you're heading downwards, you are looking into a target downwards, or the trend is to the downside, then you are wanting to trade only under the centroid area. That's your centroid area, right? That's your centroid area. Okay, your centroid area here, and you are wanting to then trade and wait until price. So price is just up here. It hasn't actually gone to this area here. Once it does, then you can look into going downwards to target this area here at 138.90. So 138.90 is still a valid area to target since we tweak it to psychological numbers, but 140.43 is better to tweak it based on psychological numbers to 140.40. So wait a little bit more once it reaches there until it goes to 140.40. Now 140.40 is your trading area that you could easily put that as your pending order. If you put that as your pending order, you wouldn't get hurt at all at this moment of time, okay, because it wouldn't be triggered anyway. So that's one of the trade idea for GBP JPY on your 1 hour chart. Only if the trend persists to the downside. Anything could change at this moment of time. Let's say prices does go up a little bit more, and go above all these 3 lines and proceeds to go way up. Your trade wouldn't be hurt, but the pattern may have been hurt or failed, but that wouldn't actually hurt your account or your trade at all. Okay, so now let's proceed to looking at a little bit about, like I've mentioned, support resistance zone. Let's say you have got, okay, you need to first look at what the candles are doing at this moment of time. Okay, of course you are heading downwards, okay, but prices has not has not traveled downwards as much. So it has a risk to go up, correct? What if it goes up? What would push the prices down? You would see to your left, you have got resistance here. You've got more resistance. You've got loads of resistance here, a lot of resistance here, some support here, correct? Support here, resistance here, resistance here. What you would need to do is always to look at the money flow. The money flow on your chart can be easily done by first looking into all these circles. These circles that I have drawn are support resistance circle. And then you attach all these lines, you attach all the dots, okay? You attach all the dots like this. I know it appears messy, but it's going to be very helpful for you. You could see that it is a movement like this. It's weakening, okay? It's weakening. So it is actually forming a sort of what do you call that? A very bandy type move coming downwards. It's actually moving this side. Now you've got a circle like this. You have got the business cycle that moves like this usually. Okay. All right. Now usually it moves from accumulation, sideways market going up, and then loads of distribution of very volatile market, which is what's happening here. So now it is sort of confirming the potential move to the downside, but we are still waiting for prices to come in and hit this 140.43 area and go under it, and then it would trigger our trading area. If not, it wouldn't be triggering anything at this moment of time. Okay, so anything could happen and will bounce out from there as well and things like that, and then come back down and stuff. But now it's got a bit of a resistance based on the 3 EMAs for the GBP JPY. So now you know you've got resistance area, support area. So how do we draw a support resistance area? Okay, or zone. Now all you need to do is find that resistance area, and the more the candles, it's even better. Okay, so let's say, I'll give you an idea. We have got, let's say we pick this whole area here, okay, this whole area here, because you've got all these candles just sort of concentrated in that area. You've got many candles. Okay, so let's look into that area, and that would be a resistant area. Why? Because it went up there and then come down. So resistant, okay, support is here, here, here. Okay, that's your resistance. Resist to go upwards. Okay, that's your resistance, that's your support, that's your resistance. All right, so now let's zoom in a little bit, give you a bit of an idea how should you draw a support resistance correctly. Okay, now we have got all these resistance area here. Now treat all these candles at the resistance at these resistance level as one family member. Okay, all these people here. All right, all these candles here. But what you need to do is just two things: the highest body and the highest wick. That's all. This is for resistance. Now, highest body I can see in this entire family is that, the highest body. Doesn't matter whether it's a bullish or a bearish candle. Okay, just the highest body of the candle, and then the highest wick or tail of the candle. That's it. And once you've done that, you have got the resistance area. Okay, what about the support area? Okay, now let's say we go back again to all these candles here, all these candles. Now we look at the lowest support, lowest candle here, and the lowest, the longest wick as well. So let's say, for practice purposes, lowest candle, lowest body. Okay, based on that bearish candle there. Okay, and then the lowest will be from the other candle here, the wick. So you have got support area here. Now, you know now that's your support type zone, and that's your resistance type zone. Let's just go into a 4-hour chart, and let's look at how well have we actually drawn that zone. I'll take this one away, I'll take this one away so that we don't get confused. Now look at that zone, and you can then see it found resistance there. But let's go back to the market. Let's go back and see whether or not at this area here, have you found some support and resistance on the zone that you have drawn? Okay, you see that resistance that you have drawn now at one moment of time previously, long time ago, it was a support area. You got support area, okay? Then we go back, and that support area that we have drawn today at one moment of time was a resistance there, and we found resistance there, okay? So again, we have got all these things happening, right? So this, if we go onto there and make it really small, go to the daily chart, okay, you could see market found support, that zone, it's got some more support, okay, some more support, some more resist, some more support right there, and it's got lots of things going on. That is one way of knowing whether you have drawn that support resistance zone correctly. Okay, so let's zoom in and do another thing. Now I'll just get that off. Okay, you now need to look into your price itself. Where is price at this moment of time? Now price is moving upwards. Okay, it's moving upwards, but then as it moves upward, it might find resistance somewhere. Okay, so where would we know roughly where that resistance would come into play, would come into action? You need to then look into previous market. Okay, so previous market meaning you look left. When you look left at about the same level as the price now, did we find any resistance? In this case, yes, we got resistance here. All the way from here, it came down the price. So we can take that family of candle and draw at a resistance line to give us a bit of an idea where price may start to fall again. So if we look into the highest body in that family of candle, we take that candle there, and then the highest wick is also from that candle right there. So we've got a zone. This is a potential resistance zone. Okay, as we move to the left, we have got some more resistance happening at that exact zone. Okay, then we go left again. Okay, let's just see. As much left as we can see, and we find more resistance at that area, the better it would be. Another thing to look at is that once we have drawn that resistance or support zone made up of 2 or 3 lines, it doesn't matter, but more than 1 line, of course. Once you have drawn that resistance support zone, you need to also look at whether you have long candles in the past that have actually pierced through and gone through that zone. In this case, yes, it has as well. Okay, and let's look at now. You see, you've got lots of long candles there as pierced through. Doesn't matter whether it's a bullish or bearish candle, but you've got long candles. Now that then gives you an idea that that resistance zone is not only correct, that you've drawn that because it's got a lot of support and resistance areas as well previously, but it gives you an idea that that zone is quite strong because it has actually been pierced through or challenged only by longish or powerful candle or buyers or sellers, okay, to pierce through to create a new trend. So this is a good zone that you may have drawn. Okay, so this is why you have got that move. Right now we're on market, live market. You can see that the prices, they are trading at 141.02, okay, 03. Now this is the reason why you have got that resistance, and then you've got the candle moving up with a bit of a strongish type candle, but then stop there and then being challenged by the bears again. The reason is it's just too close, and then you have got all these, you see where price, the support candle have actually closed right on the dot of that zone that we have drawn based on previous prices. Okay, so in other words, if you would like to see the GBP JPY moving upwards much more, and to convince you that it's now picking up the uptrend, it needs to first go through this area, go through and pierce through this zone, which is between 141.25 area to 141.48 area. Now 141.25 is very close to the 20s psychological number, while 141.48 or 48 is very close to the 50 psychological number. So what is happening at this moment of time is price prefers to be under that zone. So under that zone gives you a better biasness to the downside. Okay, so if you've got A here, B here, C, a potential downward move for the GBP JPY, but it's still not yet the time because of the price. Price is trading at 141.03. Okay, it's too close to the side number of 141.00. So prices needs to go under 141.00, like 140.90 and below to give you the bearish move to the downside. Okay, so hopefully that's clear for you guys. Any questions, guys, with regards to support and resistance before we go on to the next chart, perhaps, or any chart that you guys wish for us to look through? Yeah, I hope that support resistance is really clear for you guys, because it is looking to the left and looking at the family of candles, looking at the highest candle or the lowest candle, and then the highest wick and the lowest wick or the tail. Is very, very important. So you need to have a basic minimum of 2 lines, not one single line. Okay, and you need to look to the left. All right. Now, the other tip that I can actually give you in drawing a Fibonacci, sorry, not Fibonacci, I'm just reading the word Fibonacci here. If you want to draw a support resistance zone, what you would need to do is always do this. If you are already, let's say, looking at the 1-hour chart, okay, to draw that support resistance zone is always good to go 1 time frame up, which is the 4-hour chart. Okay, the 4-hour chart. So if you are already looking at the 30 minutes, let's say, okay, that's the 30 minutes, then you go 1 time frame up, that is 1-hour chart, you start drawing your support resistance zone. So whatever chart you are already looking at, of course the chart that you choose has to go back to matching with your equity level and things like that. So if you are looking at any time frame, you need to go 1 step or 1 chart up to be more accurate in terms of drawing that support resistance zone. Okay, so now here, for example, I am using the 4-hour chart because I was, let's say, looking at the 1-hour chart earlier on. So I go to my 4-hour chart and I look at that cluster of candles and everything else. Okay, so I hope that part is really clear for you guys. So here we've got biasness to the downside, mainly because it has this zone it needs to pierce through first in order for us to get a better picture of an upward trend. Okay, at this stage, because it is under, I also look into the psychological level of 141.00, so it needs to go under 141.00 for the GBP JPY. Okay, all right, that's clear on this one. No questions so far on any charts or anything like that, so we'll just move along to the next ones here. Now with Euro USD, let's start off with the basics here again. We go into the 1-hour chart, let's say, brick by brick, we go to the 5-minute chart. We'll start with the 1 hour just as an idea. We can see that it's under all 3 lines roughly. It's just piercing through all the 3 lines. You zoom in a little bit, you can see that it's under all 3 lines. It's dominated by the bearish type candle heading towards the downside, being challenged here by the 3 moving averages there, found resistance to that area, and then come, sort of coming downwards. And then if we go onto the daily chart, it is not very far away from the moving averages, but it had found support recently right there. Okay, so then on the weekly chart, we have got candles a little further, and they are still down under the 3 moving averages. So Euro USD, Euro in general, they are more into the downside. So now brick to brick, meaning step by step, we go back to the 5-minute chart and try to look at whether the smaller time frame could give us a clearer picture of the trend overall. Okay, so here, for example, we've got prices, okay, moving downwards, found support, found resistance here, sorry, and then now then went downwards, and now it's finding again some more support potential. But will this candle right here, for example, this is the 5 minutes, will find again resistance? If it is finding if the price of Euro USD is finding loads of resistance in this area here, not piercing through, then you are looking at more potential to the downside again. okay, and that is paving you the path or the way to look into potential to the downside, not upside. Here, look at this bearish, this bullish candle has actually found resistance there, so it has rejected the move to the upside. So hence the reason you can see prices just coming down again here, okay, Euro USD on the 5-minute chart. And let's look at where prices and the bullish candle went upwards, and then where did it stop in terms of the wick, that little wick of that bullish candle stopped at 1.0615. 1.5 is only 5 pips away from the 20 side number. Let's look at that closing price. Closing price is 1.0614, again 6 pips away from the 20 side number. So it hasn't actually pierced through to go above the psychological number of 20 in terms of price. We're talking about the last 2 digits, 1.0612 or 13. We just eliminate that last digit. We want to make it 4 digits, okay? So 1.0612. So since it's coming downwards under the 20 side number, it's got more room to the downside. This is just a 5-minute chart. Let's look into the 15 minutes. The 15 minutes giving us, again, candles founding resistance here and on the way down here, so downward or downtrend. The same goes for the 30 minutes chart. Found resistance, ample of resistance, just concentrated around the EMA area. So there you've got more room to the downside as well. Okay, so we're just waiting for prices to go towards 1.0600 and go under the 00 side number to like 0590 or something like that, to give us more hints that the domination it's by the bears or the sellers, not by the buyers. Okay, here we can see that dominant candles are the selling candles, not the buying candles. Here we've got stronger bearish candle here, and again it's the same here for the 1-hour chart. Let's look into the 4-hour as well. We're looking into candles. They're just playing under the 3 lines. Okay, and we've got dominance by bearish candles. On the daily, it's sort of the same, and if we go on to longer time frames, it's still giving us that hints to the downside. Okay, in terms of angle as well to the downside, it's quite a steep 5 o'clock type angle from the longer trend. We've got the same going on with the weekly chart. The daily chart here, we've got all this curve downwards, but then if you zoom in a little bit, you have got that movement there. It has been strengthening in terms of the uptrend there, found resistance there, but now on the way down, we got candles finding its way down again. So here on the Euro USD, trend wise, giving you more room to the downside as opposed to the upside. So if we go to the 5 minutes chart, we zoom in, perhaps the 15 minutes chart, we need to then look into potential ABCD type pattern, okay, to the downside. So bearish ABCD type pattern. Okay, so here at this stage, not really very clear type pattern. We do find the C point here, A, B, okay, B around down here, C, and then downwards. But again, we've just got too many of all these resistance at this stage. So it's not giving us a very clear type pattern at this stage for the Euro USD. Okay, it is giving us downside momentum, but not very clear. So here we have got more room to the downside for the GBP JPY, for example, right? So if we go on to now we're moving to the GBP JPY. So with the GBP JPY, let's just start off. Let's first look into the general picture of what we could see for the 1-hour chart. It's finding resistance there, but you've got prices quite uncertain, moving in between the lines for the GBP JPY 1-hour. And I think I've posted this on Telegram as well, for those of you guys who have actually seen. I am still waiting for prices. If I look at this potential A, B, I would look into a potential C somewhere here, and then a D around there. So we just match the dot or connect the dots, A to B, B to C, and then C to D, potentially. But I need prices to come down a little bit more to give us more room to the downside. Okay, so let's just draw this pattern very quickly. Okay, at this stage, we're still safe because no trades would be triggered at this point. Okay, because we would place a pending order. Okay, and they'll tell you what the shape looks like first. Now, let's just do that. here. Now the pattern spotted is called the ABCD or bearish ABCD pattern. Okay, we have got a chance for prices to find resistance at this area. Of course, we've got a bit of a support going on there in 1 hour chart. Okay, but it is not to our worry at this stage, because we are planning a trade based on an about to form pattern, a pattern that has not really shown us very clear signs. The reason is I need the C to come down first. What I would like is a pattern like this. Okay, so A, B, C to have moved down a little bit, and only then I can sort of predict where the D could potentially be. At this point, the C here is just not coming downwards too much. Okay, I need it to come under all the 3 lines, and only then I can see it moving downwards at the C point here. So at this stage, it's a little bit too early for me to sort of predict it, but for practice purposes, we've got an A to B. Let's say it has found its C around there. So you've got an A, B, C, and how do you predict the D? You just double click that. A, B's length equals to the CD length. So this is how you predict your D point area to be there. Let me redraw that A to B line right there. A to B, B to C, and then C to D. But where is the trading area? We want to know where could we then start trading, or your entry point or anything like that. You will need to convert this ABCD into a geometric pattern by attaching your A right down to the D area. And once you've done that, you can see that the lines crosses at this point. That center point area is called the centroid, and this is an indication of where you could potentially trade. And because you're looking into the downside, you are then looking at trading under the centroid area, targeting the 138.93 area. Okay, so 138.93 or 138.00, 139.10 would be another area. 139, okay, 0.10, let's say it's your target area before it reaches 138.93, 139.10, let's say. Okay, and 140.43, you could always adjust it a little bit to 143.40. Okay, so that's basically it. So your trading area wouldn't start being triggered if you put a pending order on the sell side of it, trading under on this area 143.440. Then you would enter that in your pending order. So you've got for example, I would be doing my new trades like this. Choose your volume and all that. Change your type of order from market execution to pending order. So the pending order means you would then choose whether it's a buy limit, stop, sell stop, sell limit, and all that. We can always clarify that for you. You can always ask your mentor in the group as well, and we can then clarify what is a buy, stop, buy order. You choose your trade type, your direction, and then you choose your pending order type, and you just place the prices. So the prices would be there, your entry area, and then your take profit would be there. Okay, so your stop loss would be about 67% of your A to B. That's your stop loss area, 67% Fibonacci level, okay, of your A to B. Okay, 67% Fibonacci level. You pull it from A to B, and then you find your 67th area, 67%. So let's just do that very quickly. All right, now here A all the way down to B, and I look at my 67% somewhere there. So that's my 67% A to B, right there, 67%, just under the C point area there. Okay, so that's your potential stop loss area, because your entry would be under this area here anyway. Okay, so you could see that it's more or less like a 1 to 2 risk to reward ratio, whereby it's bigger, your potential from entry to your take profit area, and your stop loss is there as well. So you're measured, your risk is measured in there. Okay, so at this stage you're not looking into into that at this moment of time, but you've got prices there, hence the reason it's not ideal for you to apply that trade at this moment of time, because it may actually it won't kick your stop loss because that price entry has not been triggered anyway, right? So your trigger price would be here, but let's say price does go up, then your stop loss level will be 67% of A to B Fibonacci level. You have got two ways, okay, two ways of doing a stop loss based on this method here in geometric pattern. One is 67% of your A to B of the ABCD pattern, and then the second choice is just to use that very simple formula of 1-to-1 risk reward ratio, okay, which means that if your potential entry point to your take profit area is 50 pips, then your stop loss will be 50 pips as well. It's just similar to your profit potential. What's your profit potential? You equal that to your stop loss. That's as easy as that, and as 1-to-1. You've got a choice of two, so you choose either that or your 67%. For me personally, I like using the Fibonacci 67% as my stop loss area. Of course, I sometimes, most of the time, tweak that to psychological levels as well. Okay, so we have got GBP JPY right there. Now, what's going on with the gold? The gold, we have had a chat last week, if I'm not mistaken, about the differences between the pattern A, B, C, D pattern on the USD 1-hour chart, as you can see in red, and then the gold 1-hour chart, as you can see in purple. Now, what's going on at this moment of time is we are looking at B to C sort of happened, but then we might look into price trying again, because it has moved above all three lines here, to actually go up to that level there at C point. It hasn't maybe got that satisfied in moving the price downwards at this moment of time. It's just it wants more than that, so it wants to actually go above that level. Is finding support, so potential of that going up there. If it does find resistance at that area, then you may have it coming downwards to the D point, which will then complete the ABCD pattern to the D point here. And once it does, then you're looking at a rebound to the upside at that level of 1230.70 area. And that level is also, coincidentally, it's at the 200 moving average too. So this area may find a good area to find support. As we can see, you've got some support here as well, and some support here, and this area here will then be a significant support area too. Okay, so there is a potential for it to find its way to the upside. It does depend on how weak the dollar is too. So now it's finding a limbo, as you guys know, on the USD JPY. It's not that clear, so you would need to then first wait till tomorrow when market kicks in and gets more active, because we wouldn't want to participate in a thin sort of market at this moment of time, with volatility as well as the volume of trade is quite low due to the public holiday. Okay, so if I'm not mistaken, it is a public holiday. We can actually see that reflected in the market as well, so moving quite slow this moment of time. Okay, so let's just get rid of the lines right there and the drawings. Okay, so hopefully that's clear. At this stage, it's already found some support to the upside. So if we go onto the daily chart, now the daily chart is giving us the long-term sort of route or possibility. The possibility is for gold to come up, to go up to that PRZ blue area, and then find the resistance at that area to come downwards. Okay, so now it's still got that room between now until this area here for it to go upwards, and if it does, then it would complete the W pattern in purple, as you can see. When it does complete the purple W pattern right up here around this, let's say prices does go up, okay, and it zigzags and reaches that area, it might actually think a bit, and then if it does, it will head downwards. So anything comes under that zone will give you opportunity to the downside. As of now, from this moment here, area here, right up to there, it will be your buying sort of opportunity there. And once it reaches there, then you're selling opportunity to the downside for the gold on the daily chart. Okay, so you will find a lot of zigzagging and all that happening, corrections and all that to the downside also, but then it's the up and down would build that zigzag to the upside for the gold on the daily chart. Okay. All right. So XAG is silver, and it is giving that very nice movement to the upside, giving some hints that the bulls or bullishness is picking up for silver. Okay, that is actually seen very nicely here with all this movement. That's really smooth and nice to the upside. We do have some dominance, as you can see, by bullish candles, more bullish longish type candle. So the expectation is for silver to actually reach to that area here at C point, and once it does, I'll find resistance at C point and head downwards like this perhaps, and then to the D point. And once it does find support there, the D point, then there's possibility for a rise up in price once it reaches the D point area. So you've got a Z-like pattern here, which starts with the A here, B here, C, and D. So there are some potentials to the downside, but again, it needs to find resistance at the C point between this area here. Okay, it's really close, but not just yet. Okay, so room to the upside and then down later on for silver. Okay, so just would like to know any questions at all from you guys, any sort of pairs that you would like to be looked at, so we can then all share together. So yeah, I think I'm done with most of the pairs. I mean, market's moving a little bit on the slow side. We do have formation of patterns, but it's probably best to look into when market open tomorrow. Okay, when you have got public holidays and things like that, you do get that slowness. Okay, so we've got some questions coming up now. Gold, yes, of course, Marina, thank you for. We have gone on to gold now, just now. We have actually mentioned about on the daily chart, we see potential to the upside zigzag until it reaches the area of 1260 area, 1250s area, and then find resistance to come down. So perhaps you want to look into shorter time frames, let's say. Okay, let's just start all over on the gold side of it. Let's just clear all of that. Okay, give a bit of an idea of what's going on with gold at this stage, and let's just see that at this moment of time, from what I can see in the market, it's picking up on pound as of today. I've got some estimation for pound to pick up a bit more, but we've got a lot of weakness for the CAD. So saying that maybe the USD is to the upside. Okay, and let's look at whether or not the gold is looking any different at all. Okay, so here on the 1 hour chart itself, we have got support, like I've mentioned, a bit to the upside. We are at 1238 at this moment. Okay, so let's scale down a bit and start with the 5 minute chart. As you can see, 5 minutes chart giving you potential to the upside. Okay, it's got room. Now here is what I would like you to look into: potential resistance zone. Okay, so what you do is you've got an upside potential here. I want you to always look left and look for potential resistance close to the current price. As price moves up and up and up and up, it may find resistance at this area here. So that area is where you would need to draw a resistance, support resistance zone. So let's say, for example, okay, now let's say based on this one here, prices moving upwards, let's say, and you've got that resistance. How good is that resistance? You need to look at the fall. Did the fall occur quite well? It did. It fell quite through and then all the way down there. So we look at this family of candles here. It's not very clear here, but I think I've got the body right there. A second. Okay, so right. So here, for example, yeah, based on these candles here, you don't have very clear body and wick, so we just pick one here. Let's say highest body is right there, that bullish candle there, and then we've got just a little bit of that resistance there. So okay, the zone is not that far apart from each other, but we see that as a potential resistance, let's say, zone. Okay, so I'll move that one down. This is based on the 5 minute chart. So there you go. You got prices here. Okay, you got resistance there, and the other thing as well is that as you move downwards, you've got a very very how do you call that, significant resistance here as well. Now the highest body and then the highest wick, and the highest wick of this resistance is simply at the price now as well, so it's picking up now prices. Okay, let's move to the 30-15 minutes chart, let's say. Okay, now we have got prices trapped in between two zones. Now both zones here are resistance zone. This is a resistance zone. Okay, all right, and then we have got that one there as well. Oops. And this one at the top here. Okay, so we've got that too. Okay, so you need prices to go through there and go above the 1239 or 1240 area to show the bullishness, okay, to the upside. Now as you can see, prices, you know, coming downwards, flirting with the area here, but it needs to come under that zone to give you bearish momentum. So at this stage, it's just trapped in between two zones. You've got zone 1 here and then zone 2 up here. It needs to go above there to give us all these potential upside move. Now just at a glance on a 5-minute chart, you have got a potential pattern here, like a cup and handle pattern. That's on the 5-minute chart. So there is a chance for it to zigzag and zigzag to go upwards. Okay, on the XAU USD 5 minutes chart. So let's just look into the 1-hour chart and see what's really going on there as well. So on the 1-hour chart, as you can see, prices just challenged, just trapped in between there. So it would still need to go above. If it does come downwards, it will find a lot of challenges here to become support in this area here as it comes down. So let's just wait a little bit. It needs to come out of the zone between 1237.48, which is very close to the 1237.50 area, and 1239.13, which is very close to 1239.00 area. Okay, so these are all too close to psychological numbers and levels as well, and it's giving us that hint that it needs to first, it has got a bit of a bullish type bias. It has found support there trying to pierce through these two zones. If it does above 1239.13 or 1239.20 and above, then you have got more room to the upside. As it goes upwards, you've got that as well to think about. You've got the highest body there, okay, and the highest wick up there. So this is your zone, another resistance zone right up there. Needs to be careful with that one as well, basically. Okay, so you've got that. So you've got zones here as well, marked by support resistance lines. Okay, all right, so that's gold on the 1 hour, gold on the 4 hour. Here, oops, gold on the 4 hour chart right there. Okay, we still see the support right there. We have got A, B, C, and then potentially upwards as well. So it has triggered that center point area, if I'm not mistaken. If you were to draw an A, a B, a C, and a D up there, but we want prices to go through these zones that I've marked at 1243 above, basically, and find the way upwards. Only then it would be better to consider that. 1243.80 is your site level, so it would need to reach 1243.90 and above to give you more room to the upside for gold on the 4 hour chart. On the daily chart, we have talked about that earlier on ABCD pattern right there. Okay, and we have got A, B, C. So your AB equals CD will give you the projection of how high it could go based on the daily chart. So if I pull that one there, double click that all the way up here, then we have got that potential area there. That potential, you look left, you could see that that's at the body closing price of that initial bullish candle that went up all the way but didn't have much of that energy and then come downwards again. Okay, so that is an indication that that price there could actually be a good area for prices to start coming downwards as well. Okay, so here, do you find any resistance? Yes, you have some resistance here as well. So that's a well marked area right there. So AB, okay, AB right there, A, B, C, D, A to B, B to C, C to D, D area right there. So that's your goal at this stage. Also because it's unpredictable, mainly gold moves with the dollar's condition. So what's happening in the States, politically, economically, and also the strength of the dollar, it is what would determine the strength, weakness, or movement of the gold itself. So it is a little bit slow today due to what's happening in the States. Okay, any other pairs that you would like us to look at this moment of time? I think we can always go onto the Euro JPY, look at what's going on, because we have, I think, have got something there that we have worked on previously. Give me a second. There you go. Euro JPY. Okay. All right. So we have that finding resistance in that area there based on a 1 hour chart. We'll change this into a candlestick chart. So here we have got all that, but we've got resistance in this area here, okay, for Euro JPY. So we need the highest body and the highest candle wick. Okay, so you've got that. So you could now see that zone being the resistance zone. Hence the reason prices tried to go through there, but then found resistance, and resisting that still until now on the 1 hour chart, and finding ways to come under it. If it does come under it much more, then you've got more potential to the downside. Now here, because of the movement of all the candles here, we have got a bearish pole and flag type pattern. So this upward channel move here will be the flag of the upward type flag. This is an upside down flagpole pattern, which means a bearish type pattern. Okay, so we have got the pole of the flag right there all the way down here, let's say, okay, to this area here, the lowest support right there, and then you've got the up and down movement to the upside. It's an upward type channel. So what it means with a flag and pole pattern is that if it's got a bearish one, you've got the pole like this, and then now you've got the price going up and down, and it's upwards channel. Then once it breaks out, then you've got a potential to the downside. So the length of the pole will be the length of that projected move to the downside. So if you look at how many pips, let's say this way here, okay, if you look into the crosshair from there right to the base here, you've got about 100 plus pips, 140 or so. So what that means is that from this top area here, you could aim at 140 as well to the downside. Okay, so this is how far it could go. The other way is to treat it like an ABCD type pattern. So you move in like this, okay, and you look into there, that area there, and that area there is marked as 118.86. Okay, so let's look into that top area all the way down here. It is very close to 140 plus pips. So once it breaks out, but the danger with that is, well, is if it does break out, usually what happens, it breaks out, okay, let's say it breaks out this area here, it might go back, find a bit more resistance there, and then come downwards. Okay, so that's your potential Euro JPY right there on the 1 hour chart. Okay, but in terms of trend, you would need to be very clear of what exactly is going on. Okay, so here, let's just do that. Okay. Now, if we go into the daily chart, you need to first apply the moving averages first, 50. Then you've got your indicators on the moving averages again on the 100. Okay. There you go. Got 50, 100, and the last one, 200 moving average. 200. Darkest blue that you can see there. So you've got prices there, hence the reason it's a bit confusing, because you've got price for Euro JPY on the daily chart, let's say, is sort of trapped in within the three lines, not very clear at this stage. Okay, so we move downwards, let's say 5 minutes chart. It is showing corrections. It's above the three lines right there, but the way that the three lines move in itself, it's not very clear, because the three lines moving average, it should be moving downwards or upwards to follow the trend. If it's moving sideways, it's also not giving you that clear indication of the trend. There you go. You've got 30 minutes chart right now. It's also in within the it's traveling in within the three lines. It's not a good sign. And here it's to the downside, but we want to first find whether or not it definitely has found resistance there and break out to the downside and got more potential to the downside for Euro versus the yen. Okay, as the same goes for the other time frames right there. Okay, so that's your Euro JPY. Would there be any other pair, any other questions that you guys might have with support, resistance, price action, psychological numbers, anything that you would wish to find out a little bit more so I can help explain them to you? I think that's all I've got for in a quiet sort of market at this stage. We've got some patterns from last week as of Friday onwards to wait for it to break out. The reason for it not doing so today as well, because of the market movements being slowed down by the public holiday in the States. Okay. Okay. Questions at all? Nobody's got any questions? What about the AUD USD? Perhaps we'll look into that. Okay, we've got prices there. Prices, just at a glance, price itself for AUD USD is at 0.7672. It's just too close to the 80 side number as well. So it would need to go lower than 7670 to give us more room to the downside. If not, as it travels upwards, it would then need to go above 7690 or 7680 and above towards 7690, and only then would it then give us more hints to the upside. Okay, at this stage it's just biasness to the downside as opposed to the upside. Okay, it's more downward there on the AUD USD, but again, you know, it's probably best for us to look at clock angle as well as the moving averages and look at how candles are moving with these lines. Are they under all three lines or above all three lines? This is the most important thing as well. Okay, so we've got 100 right there, and then you have got the 50. And here itself, you could see that the prices for AUD USD on the 1 hour chart is moving to the side, moving sideways in within the three lines. It found support right there, so it would need to first break out from that area first. Okay, you have got some support in this area here. Okay, but as we go to the 4 hour chart, you could see that the biasness is more to the upside, okay, because here it's not been very clear. Here it found support here, it didn't manage to come downwards, but as you go to the 4 hour chart, you could see that it has found support and already crossed upwards, and the three lines are clearer here. They don't touch each other here, they're far apart, and you've got all these prices have found so many support on the 50 moving average itself, and then now as you see it, it's got some more support, and it's giving us more hints that it might want to break out to the upside. Okay, you've got the family of candle here finding support. Okay, you can always draw a support zone. So first thing is the lowest or the longest body right there, and then the longest wick or tail. Okay, then you've got that zone. That's your support zone. It has found support there. If at all it's on the way down, it would need to make that support area a resistance and come downwards, and only then it would hint you more to the downside. But at this stage on the 1 hour chart, 4 hour chart, sorry, itself is hinting more upward sort of move, more strength to the upside. Is also shown on the daily chart. Okay, so here it may be I mean, here for the Euro USD, if at all, is giving us lots of hint to the upside. I may be looking at pulling this area here and look at what are the possible lines to the upside that prices can reach. You've got 161.8 right there, you've got 200 right there, and you've got 224. Okay, so here I see the potential of prices reaching any one of these lines here in order to complete for me a potential Z-like pattern. So the higher up there and come downwards, that may be a potential pattern for it to go zigzag upwards, find C at this point, and then come downwards to find D at this point. Okay, so that's for the AUD USD. At this moment of time, more room to the upside, as I can see. Okay, so got room around here. Just pull that to the 50%. Yeah, I think it's got more likelihood to the upside, reaching that level there, which is I think the 200% or 2.0 Fibonacci level of this A to B area. So this is a potential area. Okay, so usually what happens if prices does move upwards to that area there, let's say, then it may find support or stop moving downwards more at this area here at 50%. So this is your 50% area right there. Okay, let me just draw out that pattern for you. So AUD USD on the daily chart has got this potential of a bullish Z-like pattern. So as you can see, it hasn't actually reached the C area, so they may, if at all it finds support, it's got more likelihood to reach the C area, and once it does, it may find resistance at this area to come down. Now you would need to look into previous prices as well to see whether you do have any resistance in this area, and it does look like you may have some right there. Okay. At 0.7, that resistance area itself is 78.88, which is closer to 78.80s area. So 78.80s area, we do find some support here. As you can see, it hits some resistance area here. So this is quite a potential resistance area to find. If I just draw that zone based on this area here, low, and then based on that high there as well, and another right here. So you've got a bit of a zone going on there. Okay, there you go. You've got three possibilities of prices finding resistance area on the daily chart if at all it starts moving upwards. If it does find resistance there, then it becomes a C point coming downwards, and that completes a Z-like pattern to head down towards the D area. Let's see what happens with that AUD USD. Okay, I think that's all I have for you guys. Now it's 4:25 now here my time, 4:23 in Cyprus, Limassol. If you guys got any questions at all, anything that you would like me to clear up, if not, I'll wrap this one up here for the Monday session and meet you guys again on Thursday. Probably more action on Thursday, more pairs to look into. At this stage, we are in a slowdown type period as well here on the charts, okay, based on most pairs. But we did find some movements this morning with the pound and various others, but be sure of the trend, okay? When I say be sure, find lots of hints that would give you an idea of what the overall market outlook or trend is for that particular pair. Okay guys, I think that's all I've got for you guys. So I've got no questions so far, but again, once more, I would like to just ask if you guys have got any questions, feel free. You could type it right into the box there. We can still go on. If not, then email me as well at kenny@fxgeometry.com. Okay, and you can always contact me there, and we can always find a way to communicate and help you with your questions. Okay. So no questions at all. All right, so shall I then leave it here at this to end it here for this session and see you again on Thursday. or in the group. I mean, the group's active. You guys are most welcome in the Telegram group to ask questions, share, post the screenshots of your trade, share it with others as well, so we all could help each other. Okay, all right, guys. I think I'll end the session right here, and I would like to first say a big thank you to you guys for attending today's webinar. For those who are new, thank you for joining the Telegram group as well as clicking and registering for my webinar. I'll see you again on Thursday. Thursday, we probably have got more to plan and talk about as market opens tomorrow in the States. Okay, let's see. Any questions at all? Thank you, Marina, and all the best. Happy pipping to you guys, and see you guys again. Take care. Bye-bye.